You are listening to 415 Stories, where we are having fireside chats with amazing founders and venture capitalists from San Francisco and Silicon Valley. Enjoy the episode. Hello, everyone. Welcome to the 415 Stories. I'm your host, Taha. As many of you know, besides hosting this show, I have a startup, and as a founder of a startup, I met hundreds of investors like angel investors, accelerators, venture capitalists, and I realized that almost every investor has a different perspective, different criteria, maybe investing in different industries. Like I met early stage venture capitalists investing in B2B startups. I met late stage investors who's looking to invest in Series B or later rounds. I also met with angel investors who is looking for pre-seed deals. But I have never met with a venture capital firm which has a pitch deck saying, why take our money? I think it's a great move, and this venture capital firm is Hustle Fund. And today, I'm lucky because Eric Bahn, the co-founder and the general partner of Hustle Fund, is with me. Eric, it's a great pleasure for me to have you here. Welcome to the show.
Thanks so much, Taha. It's a real pleasure, and I appreciate this opportunity to speak with you.
Sure. Thanks so much for joining me. So, your background looks impressive, but I'd like to hear it from you. You went to Stanford for undergrad and master's. Then, what made you decide to start a venture capital firm after all of your experiences? I'd like to hear your story.
Yeah, certainly. So I'll start from the very beginning and take you to the journey that led us to form Hustle Fund. So I'm the son of Korean immigrants. My parents were born and raised in South Korea, moved in the 1970s, and settled in Michigan, where I was born in the early 80s. So grew up right outside of Detroit on the west side, and then was lucky enough to attend Stanford. And at Stanford is where I like to say I met all the women that I'm currently growing old with. So on the very first day of school, I met my wife. She happened to be my neighbor in my dorm room. So at this point, I've been with her for about 16 years, known her for 19 years. On the very second day of college in a math class is when I met my current co-founder, Elizabeth Yin. So that's also a long relationship. And then finally, I think a little bit later that week is when I met the third general partner in our fund, Xian. So 19-year relationship with all these women. At different times, we were co-founders, co-investors, investors in each other's businesses. We all have similarly aged to turn this friendship into this new project, Hustle Fund. So out of college, I spent most of my time, just like yourself, Taha, as an operator. Ran an education media company for 9 years, was fortunate to sell that to the Daily Mail Group, a large media business, in 2012. After that, I started another media company with Elizabeth for millennial entrepreneurs. That's still going strong. And then finally, I guess my last real job was working at Facebook and Instagram, where I was a product manager, working on a variety of advertising products and tools. So after that experience at Facebook and Instagram, I wanted to go back into starting another small business. And I was fortunate because at the time, Elizabeth was the lead partner behind the accelerator for 500 startups, which is a well-known accelerator program here in the San Francisco Bay Area. And she offered me an entrepreneur on her team where essentially give me some space to think about my own ideas and also get some exposure into some of their venture capital work. So this is where actually the story of Hustle Fund began. And Hustle Fund actually began from a very simple observation and question, which we were noticing as we were executing seed investments in Silicon Valley. The question was, why is it that the exact same type of founders are getting the easiest and I guess highest volume of seed capital at the earliest stages? And I'll be really blunt with you. I mean, it's the same type of men. It's these white or Asian men who went to Stanford or MIT, computer science degree, worked at a Google or Facebook, combination of like this race, gender, and pedigree that just seemed to appear over and over again among the deals that we were seeing of the largest sizes at the earliest stages of seed investment. And this led to another question, which was, I just described, are getting capital because they are better founders. As in, are men better than women at starting companies? Are white people better than black people at starting? Are Stanford educated people better than non-Stanford educated people, and so forth? And from that question, Hustle Fund actually began to emerge because we began to look at the data. across the Y portfolio at 500 and working with the founders in the accelerator program. And we're noticing that, it's not necessarily a reliable indicator of success when that very specific background of founder, that white Asian men, good pedigree, good schools, form companies. Like, it doesn't necessarily predict success reliably, was our conclusion from the data, as well as our own research with working with the companies. But instead, a different early indicator began to form, that we're noticing very high correlation patterns across a very different kind of set of founders, with those who end up becoming the best companies and the largest outcomes for the fund. And it's this quality that we describe as hustle. So for us, hustle is defined as great execution and high velocity. And it turns out that teams are just shipping a lot of code, running a lot of experiments, driving very hard sales pipeline process execution metric for measuring a given team. Those teams that just ship hard and measure well against the right metrics week after week, month over month, and year after year tend to just grind out the best businesses over time. And it turns out that these founders also look like everyone. It's not necessarily just men, but it's like, women are just as good at this. It's not just a very certain category of racial factors, like, underrepresented founders do great at this as well. People outside of Silicon Valley and so forth. And when we concluded that hustle was perhaps a better way of measuring and investing into teams, we broke off and created Hustle Fund. So just to quickly describe our model for Hustle Fund, we believe that the only way that we can truly assess for teams is by working with the team side by side for some period of time before we make our investment decision. And the controversial decision that we decided to make as a fund was to defer most of our due diligence until after we write our first check into the business. Now we're investing out of our second fund, Fund 2, Hustle Fund 2. And over the next 3 years, we'll be writing 150 investments into 150 teams at a $25,000 check to start. So 150 teams receiving $25,000 to start over 3 years. We then work with each team on a growth project for 4 to 6 weeks, usually related to sales or user acquisition. And it's during that period of time where we can add some real value to the team by working with them on growth stuff. But we're also being able to monitor their execution and seeing how effective these founders are in running a startup. And reciprocally, and perhaps more importantly, the founders are also judging us to see whether we're founders who are whether we're venture capitalists who are adding a lot of value to the founders, hustling hard on your behalf, and are just generally strong partners to have and strategic partners. And what we find is that after we write that first project, and usually about 20% of the cases, we find that both teams, the founders as well as us, really like working with each other. We respect each other's hustle. And we also think that you're working in a market that can serve a venture backable outcome that is like a very large outsized outcome. And in those cases, we'll ask to participate in your next financing round with a much larger check, usually landing between $500,000 and $1 million to make you a core position with our fund. So the way that you can sort of simply distill this is sort of like dating before marriage. And I think the larger goal that we have here is two things. The first is we want to actually have this kind of dating period because we've actually have had experiences of taking investor money early in our own startup journeys previously as founders that was just bad money, just like investors who are annoying, who end up becoming really insufferable or just a pain in the neck. And we think that it's a broken model when to make a decision on marrying your investor so quickly, in the traditional way that seed investment is done or any venture investment is done. So this dating period of being able to prove each other's worth, I think is valuable. And the second thing that we're trying to show through our fund model is that ultimately great hustlers look like anyone and can come from anywhere. So even though we're not like a diversity fund, we're not trying to target a specific set of women or underrepresented minorities, but it turns out that when you focus on hustle, you get a naturally diverse portfolio. So right now, about 40% of our portfolio is women. We think it's going to grow to about 50% by the end of Fund 2, 27% underrepresented minorities. And we anticipate about 60 to 75% of our fund will be investments in companies outside of Silicon Valley because, again, great hustlers look like anyone and can come from anywhere. And we want to show that our diversity is actually a strength that actually yields the highest level of return for capitalism. Like feel-good thing or social policy thing just for the sake that diversity actually makes you the most money. And we think that by doing that, we can inspire other funds to take much more diverse deal flow as well. So we can support a larger ecosystem of founders.